Good morning and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. Today, we are going to cover a little bit of what we didn't finish up yesterday because I was not feeling well. I did talk to my doctor. It does appear to have been, at least to the best of my knowledge, specifically this antibiotic here. So that is going away, and we did not take it today. So the past 2 days of, basically the vomit show instead of the crypto mining show should be alleviated, and we'll get through it. I can already tell you I'm feeling a lot better as far as I didn't take the dose last night and I don't feel cloudy, and I obviously didn't vomit last night. So that was good as well. Today, though, like I said, other than finishing up some stuff that we didn't talk about yesterday, we are going to be talking about TSMC cutting down their orders by up to 50%. Now, remember, TSMC was already out here talking to the United States, basically addressing the US and their silicon production because of the threat of basically China claiming stake over Taiwan, and there being all this kind of weird, geopolitical awkwardness between Russia, China, and Taiwan. And then, of course, the importance there being that Taiwan controls, that's where TSMC is based, and that's where a lot of your silicon production is coming from, and the US not being ready for that. So this is really important to take a look at as well, because yes, we've talked about it before, and maybe it is holding true, HODL silicon, not crypto, because yes, while it's not profitable right now, you may not be able to purchase any silicon later on down the line, or at least it may be worth a lot more than you're expecting. I don't know. It's really interesting. We're going to cover it today. But that being said, Bitcoin miners are just not doing that well either. We've been talking about this, covering it. Lots of Bitcoin miners going under. This is primarily due to essentially the mining rigs, the actual miners themselves, like the S19 Pros and so on the Bitcoin side, not being able to cover the loans that were taken out on them for their profitability, meaning that essentially, miners are going under, and this has been happening left and right. We've seen it with cores here recently. And of course, what is going to have to happen is a lot of mergers and acquisitions. We saw some acquisitions yesterday as well. And now we're starting to see returns as well too, meaning people are returning their miners, which is just absolutely simply insane. So we're going to take a look at all of that and more, including mining profitability and the Q&A at the end of the show. I want to thank each and every one of y'all for being here and continuing to support the show through a bear market and through the struggles with, of course, the channel and being late and being sick for the past 3 months. You know, I just have to say thank you so much, everybody that continues to support the channel, regardless of everything that's going on. Let's go ahead and get into it right after a word from today's sponsor, which is yours truly. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. And welcome back. Yeah, so I was late because I did have to, I was basically up really late and had to drive back. I had to go take care of something late last night, but it is what it is. But we're here and we're it's just, you know, sometimes when it rains, it pours, and it's been pouring in my neck of the woods lately. And you just got to fight through it and continue on. Keep trying to fight the good fight as much as possible. Bitcoin miner Iris Energy says some machines aren't covering financing costs. The company's shares fell almost 9% in early trading. So yet another one. This one's actually a little surprising because it is Iris Energy. And we were expecting Iris Energy to do good because of their connection to, of course, well, the energy company production, right? Bitcoin miner Iris Energy said some of its mining equipment owned by special purpose vehicles aren't producing enough cash to meet its financing obligations. The firm also said Wednesday that the equipment has a market value well below the principal amount of the relevant loans, and that it is in talks with the lender. Now, of course, if you took a look at the price of like a Bitmain S19 Pro just a year ago today, when people were putting in orders, you could basically see it at around $10,000, right? And if you're buying in bulk and you're able to buy directly from Bitmain, etc., maybe you got a deal and you're paying $9,000 a miner. I don't really know on the back end, you know, what kind of deals they were cutting out. I can only look at retail. So looking at something like BT miners, what I saw was essentially somewhere around $10,000, $11,000 per unit. And now those same units are going for a third of the price, right? $3,000. So here's the other thing to that, right? Is that back then, there weren't the miners being manufactured, like miners were in manufacturing process, but they weren't available like on the shelves. What this ended up actually translating into was a very bad position for a lot of miners that were getting, you know, expanding too fast, because what the miners were doing were they were putting in buy orders and they were taking out loans for these buy orders for units that weren't even shipping until really around June this year. And then obviously I think the full fulfillment was like literally October of this year. So they were a year out and they were taking loans out to purchase units that weren't going to be ready for, you know, 6 months to a year. So what ends up happening is as that Bitcoin market went down, the devaluation of the miners came in, and now you have a flood of stock of these miners that are also now worth a third of what they were. And these miners owe essentially 3 times what they're worth now on these units, and the profitability is down. So even if you were in a situation where you have access to energy, right? Like you have, you're an energy company, you're going direct off the grid, you have super low power costs to free something along those lines, you could still be in a pickle if you have basically units that aren't worth enough. It's quite crazy. So the company has 3 special purpose vehicles specifically for financing the purchase of mining equipment. Together, the 3 have $104 million of debt outstanding. That's secured against 3.8 exahash per second of mining rigs. The special purpose vehicles aren't guaranteed by the parent company, and the lenders have no recourse to the company or any of its assets, Iris Energy said. Iris and its subsidiaries had $53 million of cash at the end of October, according to the company. In September, Iris signed a deal to sell up to $100 million in equity to investment bank B. Riley over the next 2 years, which would give the bank a stake of up to 31% in the miner. The firm also said it's exploring opportunities to use data center capacity that may become available, and has used an added portion of its prepayments to mining rig maker Bitmain, reducing the size of those unused prepayments to $75 million from $83 million. Bitcoin miners have been plagued by tumbling stock prices in recent months, as they have been squeezed by depressed crypto prices and soaring energy costs. Iris shares fell almost 9% to 309 in early US trading. Now, here's the interesting part as a whole is if we looked at any kind of past performance of Bitcoin, you would say, hey, look at the halving cycle. Bitcoin's going to go down to the previous all-time high, 2 years after it's halving, right? This is something that we've been talking about on this channel since well before the actual bear market in the crypto winter, that this is what we expect. The only thing that's outside of expectations really from the halving cycle is the energy costs. So, maybe these companies were kind of not adding in the energy costs that were skyrocketing at this point, and that's why they're in extra poor positions. But it seems quite odd that even with, and we all do it, right? But even with the previous knowledge or past knowledge of the halving cycle of Bitcoin, a lot of miners have just gotten caught owing too much money. Now, I'm not dissimilar from that. We've always said on this channel, you don't invest more than you can lose. You don't buy miners on credit, right? And you try to purchase during the bear market and you don't purchase during the bull run. These are all things we've talked about plenty of times on the channel. Now, where I got caught was actually trying to expand, once again, getting a little greedy and expanding into a facility, and then that getting dragged out too long. And my facility wasn't ready for a year. I decided to rent, which means basically that's a debt, that's a liability, and that is where I made my mistake. But at least I still own all of my miners outright, so I could potentially move those, shut down the facility completely, repurpose it, do something else with it. But if you're in the position where you owe money on the miners that have lost, basically 2/3 of their value, I don't know that it's really easy to recover from that. And I think that these are lessons that large firms will have to learn. And I think this is the first time we've seen the growth hit such astronomical levels. And we've seen, retail investment come in as well as institutional investment. And that institutional investment, I think, got really, really greedy during the bull run. And now we're kind of seeing it, shake back out. The other interesting portion to this is that it's ASIC mining, right? And what we saw here recently that I wanted to bring up with a lot of you all that is interesting is the price of ASIC miners. Basically, the only person making money or doing well with ASIC miners is the manufacturers, right? If you look here recently with the increase in Dogecoin price, we saw the price of Dogecoin go up and the price of the miner overnight go up 30%, right? We saw on BT miners, for example, the price of the L7 go from $10,000 a unit to $15,000 a unit overnight. It doesn't mean that they got new stock. It doesn't mean the new price, it cost that much to manufacture the ASIC. It just means that ASIC manufacturers and distributors are able to just essentially shift based on the whim. And that means that essentially, unless you're an ASIC manufacturer yourself, it's very difficult or a supplier yourself, it's very difficult to participate within ASIC mining, right? Because when the market's doing good, it's really, really high cost to get invested into it. And when it's really, really bad, it's really, really hard to get in. It's too cheap and you're not making enough money off of it. And that puts you in a really sketchy position, because there is the case where if you buy while the units are down or low in price, there is a chance that that coin never comes back. And because it's a script miner or an ASIC miner, for example, a script for Dogecoin and Litecoin, for example, if, Dogecoin decides to collapse even further and never comes back up, then you just have basically a paperweight, which is why we've always focused on GPU mining here. It's a scary proposition. And like I said, one of the big reasons I don't like ASIC mining in general is because of this factor of basically the only people that are really, guaranteed to make money are the ASIC miner distributors and manufacturers. And that's really where it ends. Like, you don't have a guaranteed revenue source if you are just an ASIC miner supplying the power and running the units, right? We could even say then you could potentially expand into hosting, right? Which a lot of people tried to do, but the hosting gets really, really sketchy when the power costs go up. So even hosting's not really the perfect plan. And then finally, I think the best plan, like when we talked with Taurus, Orion and Taurus, a couple weeks ago, he was moving into ASIC repair. Now, ASIC repair is a really interesting one, because I think ASIC repair does have viability in the long term, because you could buy broken units and repair those and like start up your own store. There's a lot of interesting paths and avenues there. Something I'm definitely looking at, just from the fact of the matter that there is a shortage for ASIC repair technicians, means that you also have a viable career path and opportunity there as well. And if it is something that you like to do, which is basically like reflowing boards and testing, doing, basically testing boards and repairing them, it could be something that is viable as an option as a business right now because of the shortage. It's to the point to where, like, in the past, Bitmain may be able to repair everything because there wasn't as many going around, but now you go all the way back to S9s. You have so many different units to repair. I think the S17 and T17s also are probably the best ones to learn to repair right now. Because I think they'll be going through their cycle on this next bull run. Whereas like previous bull run, I think the S9 repair was super advantageous, especially with options like the S10 being there, which is basically two S9s. These are kind of the things that I think about, right? But moving on to more news, crypto miner Bitdeer may extend IPO deadline by 1 year. Jihan Wu's cloud mining firm may not go public till December 2023. The deadline for completing a merger that would see crypto mining firm Bitdeer go public on the NASDAQ might be extended by up to 1 year, a Wednesday filing with the U.S. Securities and Exchange Commission shows. Last year, Bitdeer announced that it was merging with special purpose acquisition company, Blue Safari Group Acquisition Corp., but according to Wednesday's filing, the SPAC will hold a shareholder meeting to vote on extending the deadline to close the deal to as late as December 14th, 2023. Bitcoin miners have been struggling with liquidity, and raising capital has proved difficult amid the market downturn. Their margins have dwindled as the price of Bitcoin is low while energy prices are high. The deadline has already been extended twice by 3 months each, and the SPAC is asking shareholders for the discretion to continue pushing it back with another 4 3-month extensions, the filing says. Bitdeer offers cloud mining services, meaning customers can rent computing power from machines that Bitdeer owns and operates. It is founded and led by Jihan Wu, a co-founder of mining rig manufacturer Bitmain, who is renowned within the industry. And an interesting thing here is he was a co-founder of Bitmain. He should be fully aware of how all of this functions, but they're still struggling. So even the big dogs that have been in here for multiple cycles have gotten caught a little bit with their pants down, which is quite incredible. And we're going to have to see what happens here in November and December If you guys aren't familiar right now, a lot of people are wondering what happens with the rubber band. The idea being essentially if you trade sideways for so long, it's like stretching a rubber band out. And then eventually the tension's so strong that the rubber band pops and the price of said asset that's been trading sideways either skyrockets up or dives down. And the presumption is that rubber band is going to snap in November or December. And then there are people speculating on it, whether it's going to go up or down. I don't know. The only idea there is that we're going to see crazy price movement. We were talking yesterday and are going to continue to talk and sum up today. You know, the price of minting a Bitcoin, which is significantly higher than what we are actually seeing the price of Bitcoin trade at right now. And I think that's going to be super relevant. It's especially interesting because we've only seen the hash rate go up as temperatures go down because we are on that cycle now of the winter summer cycle for the West Coast. People are still trying to basically hold out and continue to run their miners. And we're going to have to see exactly how that plays out in the market for November and December. But more Bitcoin mining news. Bitcoin miner Stronghold Digital completes debt restructuring. Now, this is good news for them, but what did they have to do that, right? Well, the company over the past 10 weeks has returned 26,200 miners to NYDIG in exchange for the extinguishment of $67.4 million of debt. Stronghold Digital closed on the seventh and final tranche of Bitcoin miner deliveries to New York DIG that had served as collateral for financing agreements with New York DIG, the miner said in a Tuesday press release. This final tranche, I gotta learn how to pronounce this. I apologize. Let's just go ahead. You guys know this. When I'm a dummy, I let you guys know I'm a dummy and we make sure we are less of a dummy moving forward.
Tranche.
Let's hear it. Tranche. Really? Okay. All right. Tranche. We'll add tranche to our vocabulary of being able to pronounce. We did know the definition, so that's fine. This final tranche allowed for a cancellation of 2.1 million in debt. In all, since mid-August, Stronghold has returned about 26,200 miners to NYDIG in return for the extinguishment of 67.4 million in debt. The Bitcoin mining firms have been struggling to keep their balance sheets afloat amid soaring energy prices in a bear market that has seen Bitcoin lose more than half of its value since its peak last year. One of the largest hosting firms, Compute North, filed for bankruptcy in September, while miners Core Scientific and Argo Blockchain are both facing severe liquidity issues. Stronghold also closed on a debt restructuring deal with Whitehawk Finance, moving the weighted average maturity to 36 months from 13 months, trimming monthly payments and adding $21 million in cash to the balance sheet. The restructuring has also freed up room in Stronghold's facilities at a time when space for hosting mining rigs at an economical rate has been dramatically short in recent months across the U.S. In addition to the 26,200 miners returned to NYDIG, Stronghold has another 14,200 slots for miners available after it ended a deal with the German firm Northern Data. As of Tuesday, Stronghold has currently liquidity of about $30 million, including $29 million in unrestricted cash and Bitcoin. Quote, we are executing on the strategy we outlined during our second quarter earnings announcement in August to rapidly deliver our balance sheet, or deleverage our balance sheet and enhance liquidity. And we are actively pursuing acquisitions of Bitcoin miners at attractive prices to take advantage of the current distressed market while continuing to manage liquidity carefully, said Stronghold CEO Greg Beard. And, you know, I think this is the proper direction, but not every company is going to be allowed to return 26,200 miners, right? Like, if you were in a position where you owed money on your credit card and you try to return the equipment, that's not always going to happen. That's why a lot of miners have to sell their equipment and then try to pay off the debt. And so I think they're a little lucky in this particular situation, putting them way ahead, of course, of Compute North and Core Scientific and Argo Blockchain, which, as we've seen, are struggling quite dramatically right now. But, maybe their silicon does become worth more. Enter fun segue. TSMC cuts down orders by up to 50%, sending shockwaves, says report. The Taiwan Semiconductor Manufacturing Company has cut down its orders to suppliers, according to reports in the Taiwanese press. TSMC, which is facing an industry slowdown as its customers struggle with demand slowdown, cut down capital expenditures for 2022 earlier this year, and the firm cited a lack of demand forecasting as the primary reason behind the drawdown. Now, of course, if we look at this on the face value, it's because we see demand slowing down, which means the price of your current silicon would not go up. The interesting question will be, of course, how does that affect it further on down the line if there ends up being demand re-increasing, and how long it takes to spin back up. But the firm is also rumored to have significantly reduced its 3nm output estimates for this year in the latest bit of speculation surrounding the advanced chip manufacturing technology scheduled to enter production in the current quarter. Today's report comes courtesy of the United Daily News and it speculates that TSMC has started to cut down its supplier orders. These orders form the back end or upstream of the semiconductor manufacturing supply chain, and they involve a variety of products such as TSMC procuring silicon wafers and other consumable to keep its machines running. UDN sources believe that TSMC has reduced these orders by as much as 50%, with the drop coming after the fab also cut down its spending. Due to the critical nature of the company as Taiwan's largest and leading chip maker, the order cut down has also sent shockwaves down the chip sector as a whole. TSMC in the chip sector has also been facing inventory corrections this year, and the company expects these conditions to persist and potentially peak during the first quarter of next year. The chip maker has, however, seen strong demand for its leading edge 3nm technology, with its chief Dr. C.C. Wei outlining during a recent earnings call that the tape outs for 3nm are more than double than the ones TSMC received for earlier technologies. In the chip making industry, tape out refers to the finalized design from companies such as AMD, which is sent to the chip maker so that the latter can tailor its equipment to the product. Now you can see that you have wafer revenue by technology here, and it has the quarterly earnings for the third quarter of 22, second quarter of 22, and first 3 quarters, right? With, of course, 5nm here kind of taking the lead over the third quarter in 2022. That is probably due to, of course, the new releases that we've had, which are selling pretty poorly, right? We were talking about how AMD's 7000 series sold extremely poorly. And that is primarily due, I think that's indicative of like the entire market, because what goes away first when the economy is performing poorly is going to be, of course, the entertainment side of things. And a new CPU that costs you, a huge amount of money to dive into is going to be low on the totem pole when the prices of daily items such as food and gas go up and so on. So we really saw it kind of hit AMD right off the bat, and we're going to have to see if that affects the rest of the market later on, specifically GPUs, which presumably it will. A lot of this to me does seem to be the fact that there is less chip manufacturing on the crypto mining side of things, which is affecting the chip manufacturing companies. The question will be, is after everything gets kind of reordered and the manufacturing comes down, right? The amount of manufacturing that's going out, they restructure it to basically meet what the current demand is. What happens after that if demand rises once again? We've already seen that demand is high in certain areas like vehicle manufacturing and so on. So if you start to have stress on it again from like the crypto mining side of things, if that has a resurgence, or back on the gaming side of things or something along those lines, what happens when the production is not ready to spin back up? And that's kind of where I sit as far as like wondering how this all plays out. According to TSMC suppliers, the order flow started to weaken in the previous quarter, and this has continued into the current quarter and into the first quarter of next year as well. TSMC shared during its latest earnings report that it is facing difficulty in procuring chip making equipment, and this is where things are interesting. To me, is like, why are we having issues procuring chip making equipment, especially to keep up with its current customer orders? So this paints a different picture than the original kind of thesis at the beginning from the introduction of the article, right? This is painting a completely different picture. And that this, when combined with an industry slowdown, is forcing the firm to reduce spending. So, and this is the confusion that I have, and maybe you guys can line this out because I was looking at this earlier as well. What they're saying is that there is a slowdown of customer orders, but also there's a slowdown of getting chip making equipment to fulfill the current customer orders. So while the supply is going down, they're having issue with new equipment. What that sounds like to me, and I'll just throw it out there, is that the 3 nanometer technology is going to be in higher demand, meaning that there's going to be higher demand and they don't have enough equipment to actually meet the demand for the newer technology. While the demand for the older technology that would allow them to generate enough revenue to build or have more equipment for the newer technology is low. So they end up in a weird position where it's like demand is high and they can't make the products for the new technology, but the demand is low for the old technology that would give them the means to produce the new technology. That's what it sounds like to me at this time. On the topic of 3 nanometer, the picture painted by UDN is not great either. Its sources suggest that the monthly average output for the new technology was slated to sit at 44,000 wafers previously. And this has now dropped by a whopping 34,000 wafers to now sit at 10,000 wafers for a 77% drop. That's a lot. Key reasons behind this drop are reducing orders from both Apple and Intel. So they say it's reducing orders on the new technology, which blows my previous theory out of the water, right? With Intel's own technology also facing delays and Apple choosing to launch its M2 personal computers in March, these imply that TSMC will not be making any chips for Apple this year. And since Intel is also facing delays, its products, which use some of TSMC's chips, will also see orders flow in later. Today's report is the latest bit in a gloomy outlook for the chip sector, which was one of the best performing industries as earlier as last year, as massive influx of orders in the wake of the coronavirus pandemic and the auto industry led to more orders than the chip makers could absorb. And not just that, they're completely ignoring the cryptocurrency market, right? Which is like, yo guys, look at what was happening over here, right? It is always funny how there seems to be the big elephant in the room, which is how much of an impact cryptocurrency mining is having on chip manufacturing and how much of an impact that is having on the balance sheets for these large companies, even like AMD, Intel, even Intel, right? AMD, Intel, and of course, NVIDIA. And it seems to be completely ignored that it is tied to that to a certain extent. In fact, to the point to where we were looking at this the other day, the correlation between like NASDAQ and Bitcoin, which Bitcoin is still much, much more sideways trading than the NASDAQ. Last I checked, and we can look at that again. But where the correlations sit do seem to be if Bitcoin's going down, you know, the chip manufacturers are going down as well, because obviously mining does play a role in the amount of revenue for the tech sector in general, right? And I think that you'd be amiss if you didn't take that into account when looking at those particular stocks like TSMC, for example. The question will be, once again, will they get to the point to where they can manufacture the new technology and meet demand, right? In general, one of the interesting things, like we talked about TSMC coming out and saying that the US was not ready for a silicon production, right? And I'm wondering now if that was more of a marketing ploy for the numbers that were about to come out here. Because clearly it looks like Intel and Apple moving to their own chips and moving away from TSMC is also impacting TSMC. And that could have been essentially a PR move, a pre-PR move from TSMC before the news on their actual production goes, right? Because it may be the fact that Intel is getting quick enough and to spin up their own manufacturing, and a lot of that will be here in the US. We were expecting that not to be ready until 2025, I believe, 2024 at the earliest. But maybe there is enough there that it is causing TSMC to get nervous. Interestingly enough as well. So that being said, let's talk a little bit more about Bitcoin. I wanted to finish this up from yesterday. For those of you that caught some of this yesterday, apologies. We're going to recover it today, though. This is coming from Compass Mining, and they're talking about the price to mint a Bitcoin stateside, primarily from the perspective of, where it's highest. And I think it's important to understand where how much people are having to pay for mining in different areas, even if it is an area that's not, super filled up with miners, like, for example, California, because what that's going to do is kind of shift, I think, a lot. I think it's going to shift where the hash rate's concentrated, by a state-to-state basis, which is also going to shift how the weather responds and affects Bitcoin in general. And as far as understanding, how much of an influence, these prices are going to have on the market here in the near future, because at a certain point, we're going to have to start calling into question, are the miners actually having an influence on the price of Bitcoin? And if so, with the rise of the energy costs, why isn't Bitcoin rising, right? So previously, it always looked the same. And this is kind of what I'm playing with, right? You have the halving cycle. You have essentially the amount of Bitcoin being minted, cut in half every 4 years. When that happens, presumably the price to mint a Bitcoin goes up, right? Because the amount you're minting is less. And that is because Bitcoin mining is based on the amount of energy it costs to produce a Bitcoin. So you take that into account. You say, okay, well, now it costs this much to mine a Bitcoin. So the price initially bumps up. When this initial price bump happens from the halving, retail investors take a look and they get FOMO, the fear of missing out, and they hop in and they drive the price up even further, way past beyond what you would actually need to be profitable on Bitcoin mining, right? And then eventually what happens is the price kind of peters out and retail investors start diving out of it because it's been 2 years and it's not continuing to skyrocket, and the price comes crashing back down. And usually when it comes crashing back down, it bounces off the price to mint a Bitcoin, which on this previous cycle was supposed to be somewhere between 18,000 and 23,000 on average, last I checked. And so that is where we expect the price to be in for the next couple years. But then we ended up having this energy crisis, which is driving the price of energy up, which in turn drives the price of basically the price to mint a Bitcoin up. However, we haven't seen a correlation yet between energy prices going up and the price of Bitcoin, meaning that price of Bitcoin is still remaining to go sideways, even though the price of Bitcoin or to mint a Bitcoin has gone up from energy prices skyrocketing, which would make things extremely interesting when we get to the next halving cycle, where you would expect the same cause, basically the price to mint a Bitcoin being more, to drive the next bull run. Meaning, essentially, right now as I see it, I would expect, because of soaring energy prices, the price of Bitcoin to go up before the cycle, right? Now, how much would it go up? Well, we can take a look via some of Compass Mining's research here. Let me get a drink. Inflation is at a 40-year high, led by soaring energy prices reminiscent of the 1970s oil crisis. Whether one attributes rising prices to reckless monetary policy, excessive fiscal stimulus, a pandemic creating shortages, or geopolitical conflict, one thing is certain for Bitcoin miners: rapidly rising electricity rates are here, and it's going to be a fight for many just to survive. Casualties have begun rolling in, with Core Scientific warning last week that the company will fail to make debt payments in the coming months, echoed Monday by Argo Blockchain's similar notice. Amidst shrinking mining revenue and increasing operational costs, let's examine the importance of choosing the right location for your Bitcoin miners to outlast the bear market. During the height of the 2021 Bitcoin mining bull market, it was common to see the promotion of home mining as passive income source. Idealists in the community envisioned a distributed network of Antminer S9s printing non-KYC money in backyards across the country. Revenue per hash has since collapsed, putting the cypherpunk dream on hold, as it no longer is profitable to operate an Antminer S9 anywhere in the United States at industrial electricity costs. At residential electricity rates, it's even worse, with estimated annual losses now approximately twice the purchase price of the machine. Looking at more modern mining rig, the Antminer S19, a year ago, the largest challenge was getting rack space operational. Smaller mining operations were at times location agnostic, as revenue far surpassed electricity input costs, and companies raced to get hash rate online, however and wherever they could. For the better part of a year, even rack space in California at industrial electricity rates would have been a viable option. Today, that is certainly not the case. Swapping from daily profit per machine to the current profit margins for the device, it's clear that location is paramount in the current era. The once almost attractive California rack space would be a disaster at current rates. The average industrial cost of electricity in the state is now over double the expected revenue that can be expected from the resulting hashes of the latest generation of miners. The price of Bitcoin would need to climb back to $45,000 for hashes from the S19 in California to break even today. Nationwide residential rates are not far behind, with a break-even mining price over $35,000. Now, keep in mind, guys, that this is the price I'm kind of interested in because we are home miners. $35,000 for the break-even price over nationwide residential rates, which would tell me, because we had a bunch of miners move stateside, and we had this push for, of course, at-home miners, even on the Bitcoin mining side, is what's going on? Why have these increased residential rates and costs not driven a similar price increase to what we see when Bitcoin halves, right? Because what we have seen, if we take our previous estimation, right? If we take a look at the previous bull runs and then we look at the bear markets, or previous halving cycles, and then we look at the bear market, our expectations, like I said, would be between 18,000 and 23,000. However, now if we look at residential rates, you would take that bottom number and double it to 35,000, which would tell me that our top end rate, which would be the residential rate, should be around 35,000, bringing our industrial rate obviously up in line to a certain extent, but that is not happening, or at least it's not happening yet. We could say that this would be indicative of a sign of the rubber banding going in the up direction instead of the down direction for November. However, that would be terrible financial advice and is just basically me interpreting the data in my own head and talking about it for myself. But I guess that could be a possibility, right? Even historically appealing energy markets in areas like Kansas and Louisiana are currently not economically viable at average industrial electricity prices. Yet, despite the tight margins, some states like North Dakota, Texas, and Washington remain profitable, providing miners the best chance to outlive their domestic competitors. Undeterred by rising energy prices, many large miners remain committed to aggressively growing their market share. Although higher electricity prices will put pressure on margins and slow growth, we should expect to see a continued rise in total hash rate. This will no doubt be coupled with capitulations from miners who were unable to secure cheap energy during the mining bull market, and now insufficient cash flow to cover their operations. What's clear today is that an era of printing free money in your backyard is over. In this low revenue per hash environment, it's more important than ever to optimize every aspect of your Bitcoin mining setup. And one of the key pieces is securing access to negotiated industrial rates and behind the meter electricity. Home mining on residential electricity prices is simply impractical going forward. However, like if we still look at industrial prices, those have been going up as well, as I've talked to a lot of people. So whereas like even in Texas, where those industrial rates would have been cheap previously, they have gone up here recently. And I don't know that I agree that we will never see home mining profitable again. I think for GPU mining, it's definitely going to be profitable again. But I don't know. It's hard to say exactly what's going on here, other than I would expect once again to see in general, because here's the deal. Let's wrap back around. Let's back it up just a couple steps. If industrial mining is the only way to be profitable right now, behind the meter, et cetera, and so on, why then are we seeing so many Bitcoin miners fail at this time, right? Primarily, it's due to my assumption, all the loans they took out to purchase miners. But you would assume that part of that is also the increase in electricity costs too. And as all of these contracts come back up for renewal, you would expect for the price to go up even more, meaning that even at an industrial rate, you are going to see essentially miners continue to fail and have to pay more in energy costs. But if our original statement is true, and we look at the past halving cycles of Bitcoin, and we say that Bitcoin halving cycles cause the price of Bitcoin to go up because the price to mint a Bitcoin in energy goes up, then you would expect the price of Bitcoin here in the near future to go up based on the increase in energy costs. Is that actually going to happen? I don't know. I feel like it actually has to happen for Bitcoin and cryptocurrency to survive to a certain extent. That or a lot of miners have to shut down. But if a lot of miners shut down, we have a lot of e-waste on our hands as well. I'd like to hear your thoughts and opinions in the live chat as well as the comment section below. Once again, I'll say this. We've always expected the halving cycle to remain true through this, meaning that we wouldn't expect Bitcoin to start coming back until the end of 2024 in price. However, due to, once again, what I'm highlighting here is, if our argument is that the halving of Bitcoin causes the price of Bitcoin to go up because the price to mint a Bitcoin goes up, then because the price of Bitcoin, the price to mint a Bitcoin right now is going up due to energy costs rising, we would expect Bitcoin to go up in price at some point. That is the expectation. Not financial advice. I'm just saying, if this, then that would make sense from a logical perspective. Then we could also get into, at the end of the day, later on, we'll talk more about inflation and the effect of it. Also, upcoming deflation possibility, because we are talking about that now with the request from the government to Jerome Powell to stop increasing rates. This is going to get really interesting really quick in 2023. Now, let's go ahead and talk about some releases for the day. We have quite a few different releases, so I want to try to cover them. It ranges from new, essentially new coins to new miners to some announcements that I want you guys to check out. Now, this first one is, I have not gone through it. I'm going to sit down and try to read the whole thing. It's extremely long. It's 84 pages, and it's the summary judgment hearing transcript between the SEC versus library. And now I'll show you guys this here just so you're aware of this, but this is extremely important to pay attention to, because not only does it affect cryptocurrency, but it does affect the way in which we will communicate with each other in the future, from my humble opinion. So as we have it now, we essentially have, we have centralized entities, companies, corporations that run the internet, right? So the way we communicate on YouTube is through a company, Alphabet, which owns Google and YouTube. And then, they pretty much handle the distribution of my content, right? If we're on Twitch, it's owned by Amazon, which is a centralized company. And then, of course, that company has some sort of say over the content that I produce over there. with specifically LBRY in general, what it is a decentralized content creation platform like YouTube. And because it's decentralized and they don't control the keys, they don't have the opportunity for censorship to the point that a single individual company would have. And this is going to be important, I think, as we move forward. And I think for all sides, like this doesn't have to be, oh, well, the company, you know, is right now the way it functions, best I can tell, is everybody's always just worried about if the company is controlled by conservatives or liberals and if they're going to silence one side or the other based on their political opinion. That's been the biggest argument lately, right? Especially as we see with Elon Musk and the Twitter takeover. A lot of liberals are worried that it will have a conservative leaning moderation panel. And previously, you know, conservatives were upset that Twitter had a liberal leaning moderation panel. The point of having an option outside of that, which is on the blockchain and immutable, with essentially a jury type system that's run by the people, not by an individual company or an entity, right? Is that you end up in a position where both sides have the ability to have the freedom to produce the content they want, say the things that they want, and not be basically either silenced by someone based on their political affiliation, etc. It's a decentralization of content creation, and I support this. I think that's why it's very important to also see what's happening on the crypto side of thing, which is the LBRY token. And that is really where the SEC is coming in with Odyssey, is that essentially LBRY doesn't pay out in the form to its content creators that you would necessarily typically see on something like Rumble or YouTube, which are centralized entities where they pay out in a fiat currency, they pay out in a token. And so that token can then be taken and exchanged for a fiat currency. But this obviously brings up questions from the token's validity perspective and how it is, you know, regulated within the US and so on. So that is what's going on here, is essentially how this token is going to be regulated from an SEC perspective, you know, whether or not it's a security and so on. The thing that really helps, I think, in this particular case is that LBRY is a proof of work coin. Or token, right? So in this general purpose, like I run LBRY miners, for example, they've never really been that profitable, but I've always used them. I had a couple because I support LBRY. I think that gives LBRY a little bit of an advantage here. And from the proof of work perspective, obviously, our perspective on this channel would say that does help it with being a commodity. That's why Bitcoin is a commodity to a certain extent. But I would highly recommend, you know, you check out the transcript. I'm going to try to do a TLDR and get through all 84 pages at some point. And then kind of give you guys a wrap up, or at least find somebody with a really good wrap up. That we can bounce ideas off of. I think it's really important to pay attention to this particular case in general, though. Not dissimilar, of course, from XRP, except XRP is a proof of stake coin. So what this one is quite a bit different. It's a proof of work coin that is essentially helping people create content without the need of a third party, right? Which is, you know, from my perspective as a content creator, the number one thing I would be looking for, which is being able to create content without a third party always nitpicking me, taking 5%, 10%, 20%, 30%, you know, upwards of, like on YouTube, 40% of my revenue is getting pulled out and given to Google, right? And if I take a look at Twitch, it's the same. It's like 50% on Twitch. You know, even Rumble is like, or Locals, for example, that we use right now is like 10%. You know, you're happy to give platforms to a certain extent, you know, something for building that and providing that outlet. But when you are completely robbing the content creator and you get into an economically compromised position like YouTube has here recently with losing $400 million worth of revenue, it gets into a very tight position where you say, well, I really wish I would have set this up on some sort of parallel economy. and had some sort of setup with Bitcoin, right? I think like we made a good decision personally, like on this channel, moving over to locals and setting that up as a separate entity for revenue generation to make sure that I can continue to make content. But you know, this is kind of the case for everybody. And I think here in the near future, just a note to all content creators, I'll talk about this more on Twitch later today, but a word of warning is that ad revenue is going to continue to go down. And that is because less ads are going to be run on these platforms. And that is primarily due to the fact that the economy is suffering and people are not going to spend as much on ads. When things are going really, really well, kind of opposite of what you would want to do, especially in crypto, which I'll talk about on Twitch later too, which always happens is that once crypto goes into a bear market, all of the crypto companies cut all advertising, right? And then you go through the bear market, and then at the end of the day, that's why everything goes back to being correlated to Bitcoin, I think, to a large extent. And I think we're going to see that, but across the entire economy. And I think that it's going to affect a lot of content creators here coming up soon. And so, like I said, we'll talk about it more on Twitch. Let's get into more release information. We do have release info from Evrmore, which is a Ravencoin fork, I believe. Correct me if I'm wrong. And now they have a release for mining. So these are the first binaries released for the Evrmore mining. Mainnet uses Prog POW, GPU proof of work mining, which is essentially, if you're not familiar, Prog POW is similar, not dissimilar from basically what Firo runs, what what Ravencoin runs with Kapow, and so on. So technically your Ravencoin fork right there. And you should expect essentially Prog POW Ravencoin hash rates if you decide to mine this. And this one in particular, I think what the point of this release was is so that you can solo mine Evrmore easier, because there is basically for a GPU solo mine here, it says, to the core, and bypassing any need for a Stratum proxy, which is, I think, awesome. Like support at the node level with no proxy required for solo mining is very, very good for a project early on, because that allows miners to mine without getting hit by fees from mining pools. I think that it definitely inspires, a bit of work from the miner, right, to obtain it, but a more of a familiarity of to the project from the miner, which I think is important, right? Like we talk about miners' influence over projects, and the biggest one being, of course, the halving of Bitcoin causing the price to go up. Well, if you have GPU miners that are invested in your platform, you are going to have more transactions on the network, right? GPU miners drive network activity. This is clearly seen with the move from proof of work to proof of stake in Ethereum, where, transaction activity on the network post-merge dropped by 40%. Most of that being, of course, things like miners converting their payouts from layer 1 to other side chains like Polygon or layer 2 options. And a lot of the activity that was on the network was driven by miners, and activity on the network driven by miners drives interest from retail as well. So anything that you can do to get a GPU miner early on invested in your platform, as somebody that's developing a coin or something like that, I think is paramount, right? Because then you're going to be driving transactions. If somebody goes to a block explorer for your project and they pull it up and every single block is full of 0 transactions and you're basically mining nothing, then they're going to be a lot less likely to actually utilize or be interested in your product or project, depending on like how you're setting it up. But anyways, but from your coin in general, your network, if there's no activity on it, right? Whereas a retail investor that goes and looks at something where there's activity on the network pretty consistently, where the blocks are filled with some transactions, that's going to be a lot more enticing, right? And so I think there's something to be said for that. And I definitely am curious about this release. I definitely want to take a look at it later today, get one spun up for myself. Like I said, I'm a big fan of no stratum proxy nodes for solo mining, and I appreciate it. Now, Red Panda Mining tested this out, but just so you guys are aware, and it's linked down below, MiniZ version 1.9Z5 is out. And this is up to 10% improvement on AMD GPUs. Now, they were still behind. So with release 1.9Z4, MiniZ had gotten ahead of LOL Miner on the NVIDIA side, but was still behind, to the best of my knowledge, on the AMD side. But now with 1.9Z5, they should be ahead at this point. I have not tested this, but it'll be something that we definitely need to check out here soon on the Twitch channel. So we'll be doing that later on. But I just wanted to make sure you guys are aware that there is potential upgrades for your AMD GPUs on Flux, basically, which is the big one. They added a few other things that we could take a look at. There are improvements on, both 125.4 and 144.5 algorithms for Equihash. They added fan speed all and fan speed all temps options for fan control for all GPUs. They added fan max options, and they added power options for AMD on Linux. They say they have better AMD fan control on Windows. A lot of this does look like improvements for AMD in general. They added GPU offset and memops offset for options for NVIDIA GPUs on Linux. And they added fan core and memory clocks and speed information percentage to the telemetry. And they added support for the RX 5500 and R9390. And they said feedback is welcome. They fixed fee getting stuck in particular conditions related to network issues. And they fixed OCX on ETH hash. They fixed Ubique stale shares on start. And they fixed worker name that was not consistent on Zerg pool. They fixed 144.5 broken kernels and removed the light hash rate kernels, because obviously with the latest drivers, we don't need light hash rate anymore. The big disappointment that I still have, I think right now, is that we have been going on a few weeks now with the NVIDIA drivers no longer being light hash rate, and HiveOS not updating their image to support the latest NVIDIA driver. I really hope that essentially HiveOS will get on it, but I do know that their focus has moved over to ASICs in an attempt to generate more revenue that was lost from, of course, all the GPU miners shutting off. And of course, I can see that because we do have an affiliate program with them, and I can tell you that a lot of our affiliate revenue has gone down a lot. So I understand the move, but with such a big release option, with such a big driver release, I would expect a little bit better from HiveOS. So guys out there, if you can go ahead and at least get your, the images updated so that we can not have to worry about the funkiness with NV tool failing and so on, that would be awesome. Now, Exbitron has listed Radiant. Radiant's a coin that we've been following for quite some time, and they did win the listing battle on Exbitron. So if you have an Exbitron account and you're looking for a place to trade Radiant, RXD is the ticker, and they have a USDT pairing as well as a Bitcoin pairing. So definitely go check that out if that's something you were looking for. Finally, what am I mining? I am currently solo mining Palm. What is Palm? It's the proof of meme coin. We've talked about it over on Twitch. We have just our test rigs over there, the LHR01 rig and the RX 6000 series rig. And then we also have our little V1 Mini on there too. And, as far as the price goes, it's only like on an ETH2 contract. Essentially, proof of meme is very interesting because it's doing something that a lot of people stopped doing, for good reason too, by the way. But what early on in Ethereum, the big deal was these things called like ICOs, or initial coin offerings. And what it essentially was a release of a new cryptocurrency blockchain project, but as a token contract on Ethereum. And basically what you would do is you would go connect to the Ethereum blockchain. You would go buy a token of X token, let's say proof of meme token, like we're seeing here. And that would be a promise that when mainnet launched, they would give you the actual coin in an airdrop. And this is how basically pre-sales were being done early on within crypto. It's been done like this for quite some time now, and a lot of those died off because pre-sales in crypto are considered generally a negative thing. So would I recommend that you mine proof of meme or Palm coin with this in consideration? No, I would not. However, it is what I am doing, primarily because I'll probably do a guide on it and we'll do a full video on proof of meme because this is a new market, right? We're in another cycle and a lot of people have never seen this before. Right? Like a lot of people have not seen an ICO launch like this, and it's not being called an ICO launch, but it's called like an ETH 2.0 launch or whatever the heck. It has some very interesting marketing, but behind the curtain, it's an ICO, right? Behind the curtain of Palm, pull it back, it's an ICO. So I definitely wanted to try to do like as much participation within it so that we can do a video on it, because I think a lot of people might not actually be familiar with what this actually is under the hood, and it could be a little confusing to some people. So let's talk about mining profitability right after I run the ad one more time. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. And welcome back. So first things first, let's go ahead and take a look at what to mine. Bing, bang, boom. We have the RTX 3090 queued in here. A lot of people ask me why the RTX 3090, primarily because when we started doing this, only the RTX 3090 was really out. And so for the 3000 series, right? We had like the RTX 3090 and 3080 had launched. I had the 3090, I had done some testing, and it kind of just stuck. Yes, if we're talking about peak efficiency right now, we're talking about RTX 3070s, we're talking about RX 6700 XTs, and here in the near future, I'm going to go ahead and say that really right back here, the A750 is going to be the most efficient GPU once overclocking software is released for it and miners have access to it. I think the A750 is going to easily take the lead because already with zero ability to downclock the core, it's at 111 watts at 50 megahash a second, which is simply insane. That being said, RTX 3070 currently the go-to, the mobile RTX 3070 is the real go-to, and then obviously the RX 6700 XT. That's outside, that's retail consumer GPUs, right? We could get into A2000s being shunt modded. We could get into, you know, the CMP line from NVIDIA, but just at a basis, like kind of comparison level, yes, those would be the best, but we test the 3090 and we look at it because essentially that's what we started out with the 3000 series on. Also, I think from a power perspective, it's going to take into account, you know, some of the loss of power if you're running on like a 120 circuit. It's like if we're profitable on a 3090, it's fairly certain that we'll probably be profitable on pretty much everything else with the latest generation of GPUs, that being 6000 series and 3000 series. So I think looking at that is good, but really it's to remain consistent. And we remain consistent with 10 cents a kilowatt hour as well. Now, what does that mean right now? We're still losing money. I mean, like at the end of the day, GPU mining, according to what to mine, is at a loss, right? You're losing the least amount on Conceal at 21 cents a day. You're losing 26 cents a day on Vertcoin. And it goes down from there, right? Flux is losing 33 cents a day. That's a big one that we always look at. Ergo had moved up to the top and it looks like it fell back down. When we look at mining pool, we'll see why. But, you know, Meow Coin, a big one, losing 35 cents a day. Raven Coin losing 35 cents a day. Caspa losing 39 cents a day after power. Ethereum Classic losing 45 cents a day after power. And is Ergo even on the list? What happened to it? Where'd it go? Autolicos right there. Let's cancel all these just to see what's happening to Erg, because that's one we keep track of. Losing 26 cents a day. Okay. So, there you go. Mining pool stats, though. What's happening? Are we seeing less hash rate on Bitcoin due to all these miners turning off? And the answer is no. So, even though, and this is crazy, so because the temperatures are cooling down and everybody is in the US with a huge amount of hash rate in Texas, even though we're seeing a lot of mergers, a lot of acquisitions, returns of 26,000 miners, we are still seeing the hash rate of Bitcoin go up, not down. The difficulty's going up, the hash rate's going up, and the price is remaining sideways. I don't know how much longer it can remain sideways in its current state. It is getting to the point of max stress, right? 271 exahash a second. We are up 10 exahash a second from yesterday. There you go. Let's take a look at Ethereum Classic. Ethereum Classic is still around 160 terahash a second. No huge change. It's down 5.57% over the past 7 days and no change in difficulty. Ethereum Proof of Work is down 9% over the past 7 days and still sits around 37 terahash a second, around 40 terahash a second. Ethereum Fair is at 4.77 terahash a second. It's down 12% over the past 7 days. If we take a look at Flux, we are at 8.47 mega solutions a second, down 3.4% over the past 7 days. It recently had a pump here a couple days ago and then came back down, unfortunately. It is the way it is. And if we take a look at Ergo, we are at 46 terahash a second, and it is down 6.84% over the past 7 days. And if we take a look at Raven Coin, it's down 3.45% over the past 7 days and is at 15.84 terahash a second. There you go, ladies and gentlemen, boys and girls. Let's take a look at ASIC mining profitability. The Antminer L7 doing $24 a day on Dogecoin all by itself. Remember, it can merge mine, so you probably are closer to $30 a day on merge mining, like either Litecoin and Dogecoin or Digibyte and Dogecoin. Currently, I'm merge mining Litecoin and Dogecoin. I think I want to swap to Digibyte and Dogecoin personally. That's currently where we're at. Coming in second place, moving into second place, surprisingly enough, is the iPolo G1 at $8.30 a day. Looking pretty good as far as that goes. And that's directly on Graincoin, so you don't have to worry about that price being a nice hash price or something along those lines. Because if we look at like the Jasminer X4, we get these weird reports where Mining Rig Rental says it's at $7 a day for rental, but in reality, we're looking at ZIL ETC at $5.99 a day on basically ZIL ETC, which would be ZIL and ZIL coin merge, or not merge mining, but dual mining, where it mines a block of Zilica every 60 minutes. Coming in fourth place is the Goldshell LT6. So the Litecoin miners are really killing it right now at $3.74 a day on Dogecoin, probably closer to like $5 to $6 a day if you merge mine. And then coming right behind that is iPolo V1 on, surprisingly enough, ETH at $3.81 a day. Not sure what's going on there. Probably have to verify that later on down the line. If we take a look at the S19 Pro, we are still under $1 a day on basically Bitcoin mining. If we click into it, let's go ahead and take a look. Yeah, if you're going to mine Bitcoin right now, it's at 6 cents a day at 10 cents a kilowatt hour. Pretty much meaning like, yeah, like we talked about earlier, residential rates have pretty much made it impossible to mine Bitcoin, even on the most efficient miners currently available. So there you go. Let's get into questions and answers for the day. Remember, super chats are never required, always appreciated, first to be answered because they're the easiest to read. I could use a ton of them right now as we've lost $6,000 in revenue in less than 28 days. It's okay. I'm going to be doing my best to work myself out of this hole. And hopefully what we will do is learn a bunch of lessons that we can share with you all. Remember, if you do not have the ability to send a super chat, it's not required. And you can just tag at Son of a Tech, here on YouTube, and I will answer it. In addition to that, the best way to support the channel is hitting the like button and sharing it out. We have experienced some suppression due to talking about individual sovereignty because obviously the Department of Homeland Security has targeted any content and asked for it to be suppressed if it talks about individual sovereignty. And it is what it is. At least we have proof and it's not just in our heads now, right? Isn't that nice? Come and mine it. I got this shirt from the mining conference. I don't know where it came from, but if you guys enjoy it, I'll try to find it and send you over the info on it. We do have a new apparel company as well, coming for sponsorship soon. This month, I've talked to them. I got to get the pre-roll done, so pay attention to that. We have some really cool stuff coming from there. Let's get into questions and answers. I'm going to get zoomed in here. We got Elsie saying, at Son of a Tech, I participated on the ICO of Tempe on the Cadena network. I consider the money lost. Didn't follow the project anymore. Is it dead? I have no idea. If it's an ICO, I stopped following it too. DK says, at Son of a Tech, any comments on Novo or ETH1? No, I don't have any comments on Novo or ETH1 at this time. Novo, I haven't seen any announcement updates in their Discord in quite some time. To me, it looks like the development team has kind of gone dark. You know, if I look at something in comparison, like Radiant has development going on. They have stuff in their announcement channel. Obviously, they just got listed on Exbitron. Their community is active. If we look at something like Caspa, they're extremely active with Dagnite coming out soon and a lot of talk of Dagnite, which is super impressive in general. But I think as far as Novo, my personal opinion, just because it is one I monitor every day, it doesn't look very active. Okay. So I would have some questions surrounding that. It's me says, ask Son of a Tech, hey, can you recommend some kind of antivirus? Been using Norton for ages. I mean, the best antivirus is not doing dumb shit, obviously. I bounce around. I use multiple AVs because unfortunately you do end up in a position where I think not every AV is going to catch it. You know, in the past, I've liked Kaspersky a lot. From a organization perspective, I like WebRoot the most. And then from a free perspective, Malwarebytes, the Windows built in, a combination of those two works really well. And then from the perspective of just testing individual files and etc. from like GitHub or whatever, I really, or downloads, all that, I really like VirusTotal. That's just on the web. I can give you an example, I suppose. So if you did like, if you are going to download a file and you want to make sure that it's, you know, good to go, you can come here and actually before you download it, you can like do URL, right? So if I did like GitHub, and like, let's say we just did like BZ miner releases, which this will probably flag. And then we did like a copy link address and we pasted that into the search URL. We could get basically a virus scan on that particular set of files or zip file. Anyways, so then it'll come up and it'll tell you, you know, no security vendors flagged this URL, blah, blah, blah. And it goes through all your analysis, right? So you can look through it and look at the details and so on. So that can help you, like before you download anything, definitely check out virustotal.com. And then for scanning your network, there's other stuff, like I said. But at the end of the day, it's always a game, right? It's always a game of playing catch up, and every antivirus is always going to be behind. So, you know, that's the reality of it. Simstar says, at Simontek, any thought on Nodal Cache? Never heard of it. Nope. Kielbasa says, at Simontek, I got nothing today. Caspa mining is so boring. Low power, low heat, low maintenance. Going on vacation. There you go, good sir. Unfortunately, the FPGAs are kind of taking it over. So I think that's going to take some time, or take away some of the profitability. I don't know what you really move to once that happens. But I mean, good news is, right, as we get closer and closer to DAG night, as we get closer and closer to ASICs, right, on Caspa, the closer and closer we get to really huge price movements, which is kind of what you want to see, right? So a lot of us GPU miners, to be completely frank, we did our part already, right? Like the CPU miners did their part for Caspa already. And then the GPU miners did their part. It's kind of moving over to FPGA miners. I'm pretty sure eventually here we're going to start to see ASICs come out for Caspa. And the GPU miners, from my perspective, I've done my part. I validated the network while they needed it with no price discovery, etc. And now it's a matter of sitting back and waiting to see what happens with it, right? Yes, as far as like GPU mining, you can still GPU mine it to a certain extent. It's still going to give you some Caspa. It's just not the best thing to be mining with the GPU at this point. Simstar says, at Son of a Tech, it's for mobile proof of time and place. Sounds scammy, but I'd have to look into it. Do we have any more questions? Otherwise, we're going to move over to Twitch. We got to cover some stuff over there. Oh, man, I believe I missed out on a... I'll find it again. Over on Twitch today, we are going to be reacting to CBDC Tyranny from... a video on YouTube, and we're going to be talking about a stablecoin founder being killed. So very controversial topics over on twitch.tv today. I'll answer the last two topics over here, then I'll get you guys linked over there, and we're going to go directly live over on Twitch. So LZ says, that's not a damn keyboard on the new phone. Can you take a look at Tempe? They plan to do an independent search engine index, not just crawlers like Presearch or DuckDuckGo. All right, I'll take a look at it. LZ, we'll add that to our list. We got a super chat coming in from GamerKid. Thank you for the $7.99. Says, has the fan issue on the new NVIDIA driver been fixed? That may be why Hive hasn't updated. Well, okay, so once again, the fan issue on updating your NVIDIA driver in a repository that doesn't support it, on an OS that doesn't support it, i.e. Hive OS, is a problem with the OS, not with the driver. Meaning if you basically were to take the NVIDIA driver and install it, you know, on Ubuntu where it's supported or something like that, I don't think you would have the same fan issue. The fan issue is coming from the fact that the actual OS doesn't support the driver, not from the driver itself, right? Now, there was a huge mess up, not in the actual first release of the light hash rate unlock driver or removal of it, but the second release here, there have been a lot of issues with memory. So you don't want to be on the latest Windows driver, the one that supported Call of Duty Modern Warfare. There's a lot of issues pushing the memory modules too far, and I still need to do some more research on that. I'm going to be actually trying to work on that here because I found out my 3090, by the way, that I thought died, is good to go. It was the driver, and for whatever reason, it was just more pronounced on the 3090 because the 3090 has the memory modules on the rear, and whatever was happening with the new driver in Call of Duty that was pushing those memory modules and loading it all up with his... I think we're back. Yeah, we're back. Cool. All right. Well, I guess they really didn't like what we were talking about. Which was what? Well, hold on. Let me get a refresh because we were on a good rant. We were talking about, we were talking about ASIC miner repair, right? So, here's what we got. ASIC miner repair is a really brilliant startup to get into right now during the bear market. Because your startup costs are fairly cheap, right? And you can do, if you don't have work, you can create your own work. What do I mean by that? Well, if you, for example, want to get into ASIC mining repair right now, you can create your own work. Your investment floor is a lot lower because what you're doing is you're buying broken shit. So you don't have to have customers yet. All you have to do is start buying broken shit off of eBay and fixing it, right? So your entry level doesn't require any customers, has potential for customers once you're experienced, right? And has basically the advantage of low upstart because all you gotta do is get basically a heat gun and some fucking flux and a multimeter, right? So you can start basically an entire business for essentially, I mean, at the end of the day, under a couple $100 once you're buying the actual T19, T17s. Here's the next thing that happens too that I want to make you aware of. When I was talking to a lot of ASIC miners, here's the cyclical nature of things. All the old miners that are not profitable get shut off during the bear market, right? S17s, T17s, previous cycle was like the S9s, right? What ended up happening is all these S9s became profitable again. And miners started turning back on their S9s. Well, when the miners were turning back on their S9s, they weren't cleaning them out properly beforehand. So they were all caked in dust, overheating the ASIC chips, stuff like that. And they had to they were breaking. Well, because the price of Bitcoin was high and they were just wanting to mine with anything they had, they were sending those S9s off to be repaired. The next big one that a lot of ASIC miner repair guys are talking about is the S17s and T17s. So it might not be a bad idea, and this is what I'm looking at doing, right, is just buying a couple broken S17s and T17s and start learning to repair them and then have them ready to basically resell during the bull run or even the bear market if that's the case, right? So I think that from a mining business strategy perspective, and it's one that I missed, right? Like for sure, ASIC repair seems to be a pretty good idea. Like I said, because of the low upstart, right? A couple $100 for all your equipment. And then you don't have to necessarily have customers. You can just buy broken shit and start repairing it and then reselling it. And I think this is where like there is potential there for everybody. Now let's go ahead and move on over to twitch.tv. and talk about some of this more controversial stuff in the news cycle and get some reactions going on there. I want to thank each and every one of you for being here. Don't forget to hit that like button and share the stream out. Be the notification for the stream. I really appreciate it in general. My kids really appreciate it and all of that. So I thank you guys very much for all the support. So let's go ahead and get on over to Twitch. I'll see you guys over there. Thanks for hanging out.